Manufacturing is often touted as one of Asia's best sources of growth. It has impacted the economies of China through its export economy, and being the world's biggest source of products, it has impacted the Asian tigers, notably known as South Korea, for its blockbusting brands, for Taiwan when it comes to their huge semiconductor companies. With such a crucial industry, it is often pushed by numerous developing nations around the world. Big-ticket investments luring out foreign investors to even leverage the use of debt to construct and improve the many factories a country holds. This has impacted many following Asian nations who try to go on the paths of the Asian tigers. Southeast Asia is a big example. We have seen the rise of Malaysia's manufacturing and emerging capabilities, and Indonesia has also followed these very steps. One key nation, however, seems to have a unique story within it. As the title suggests, yes, it is the archipelago nation of the Philippines, a geographically unique nation that is touted as amongst the most ambitious in the entire world. It has been ambitious in many things, whether it is through its infrastructure or business processing industry, yet is it also the same for its manufacturing industry? Better yet, can it become a manufacturing powerhouse just like its emerging neighbors? And does the Philippines really need a so-called manufacturing industry? To answer all of these, we must first take a look at the current status of the country. Currently, the Philippines' manufacturing industry is actively contributing quite a huge sum to the overall economy. According to the Philippine Statistics Authority, data provided that stretches to the first quarter of 2020 has seen the value added of manufacturing consistently increase from 857 billion pesos in the first quarter of 2020, or 15 billion US dollars, to over 937 billion pesos in the first quarter of 2022, or roughly 16.7 billion US dollars. This billion-dollar industry can then already tell us that the domestic capabilities of manufacturing in the Philippines have grown over the short period of years. Further data from the Department of Trade and Industry has even shown that the gross value added to the manufacturing industry has actually grown since the 1990s, staging growths of 2.5% to as high as 10.3% in just 1 year. Such figures, however, are not often reported by media groups or government officials, but this indicator is key in telling us that the country is growing. In the context of the overall economy of the Philippines, manufacturing even plays a bigger role when it is compared to the entire gross domestic product, or GDP for short. If you are not aware, GDP is often used as an indicator to estimate how big a country's economy is. The Philippines' GDP is estimated to be around $400 billion, and manufacturing alone is estimated to contribute 10 to 13% to this economy. Moreover, it is also touted that manufacturing is a big contribution to productivity and employment. Well, after all, manufacturing is a highly skilled industry, one that is even more competitive as years go by. These growths and capabilities, however, are not exactly where the government or the country wants for the future. The government has laid out numerous plans to upscale and be a globally competitive destination. According to the numerous plans laid out by the Department of Trade and Industry, they have sought out the need to slowly shift its business to high-value added activities and further push investments in the field. One that will ultimately push the country to manufacture the likes of automotive, electronics, machinery, and so on. This is because the largest sources of production the country offers today lie in low-value industries such as the food industry. This food industry contributes over 450 billion pesos, a huge sum that is half of the entire industry, yet it is still not where the country wants to be. Its other emerging industries are related to computer and electronics equipment and chemicals. When combined, are worth no more than its food industry, which is roughly 200 billion pesos. Why the food industry is so big, however, is due to the big domestic demand, and might also be because of the fact that the food industry is, well, rather big in the Philippines. That is, however, not to say that this food industry being big is a bad thing. It is good, but the Philippines wants to evolve its manufacturing capabilities to more ambitious means. To achieve this is obviously going to be difficult, especially with the way things stand today. The service industry of the Philippines is big and is basically the life and engine for the growth of the economy of the Philippines. Its contribution triumphs that of the manufacturing industry, where the service industry alone is estimated to be worth close to 3 trillion pesos or $53 billion. This has then more than likely placed all the emphasis and focus on the heads of states, cutting down investments in the industries and rather focusing on the big chunk of their capital to the service economy. The service industry's biggest is dominated by the retail sector, professional and business services, and the financial industry. These key destinations are sought after as they too have a strong backbone of exports to the world, one that is even at a surplus for the economy. This barrier is just among many as to why investments may have been limited, but that does not mean it's entirely depleted. Manufacturing is still being eyed, whether it is by the government, private enterprises, or even by foreign investments. The biggest initiatives that we see that are brought up by the government are often seen in the aerospace, electric vehicle, and electronics industry. Private enterprises and foreign investments, on the other hand, are pretty closely related as well. The local firm known as Integrated Microelectronics, a company that is often touted as the biggest local manufacturing firm in the Philippines after it has consistently generated more than $1 billion worth of annual revenue, has capabilities related to engineering and technology devices. Foreign firms have historical moments in the Philippines as well, both in electronic manufacturing, which is often related to the past investments of US firms known as Intel and Texas Instruments, but also other Japanese, Korean, and Chinese firms. Some of them are still in the country today, often based in special economic zones. These investments, as we mentioned earlier, still might not be enough. Sure, we may indeed see the manufacturing gross value added to very much increase in the coming years or even decades, but its share in the overall economy won't more than likely surpass that of the other industries such as service. Furthermore, even if the Philippines and the government do indeed succeed with their plans of transforming the industry and focusing on the manufacturing of automobiles, electronics, and other types of machinery, it might be more than likely that these will probably cater to domestic demand with little left for exportation. This is because we think the Philippines is best suited as a service-driven nation rather than a manufacturing-driven nation. This is mostly related to the already formed service economy of the Philippines. It has enough experience both in the financial world and the business process outsourcing industry. Shifting down and focusing on something that may be out of line would be difficult and may even be unnecessary for numerous groups. Take, for example, Singapore, one of the Asian tigers. While it also has a big high-tech manufacturing capability, most of its economy is related to its service economy. The Philippines may follow the likes of Singapore and probably not that of other emerging export-oriented and focused manufacturing countries, most often also due to the geographic presence and the already overly intensive competition that has been stirring up across Southeast Asia. And unlike other developing Asian nations, the Philippines is also one of the only strategic locations with strong Western-tied investments due to its service economy, as we have mentioned and always been recalled for, related to its business process outsourcing industry. Whether it's the call center or the fast-growing emerging ones such as medical and software outsourcing. But this, at the end of the day, is just one opinion of many more out there. Numerous individuals or groups have strong cases to show why the Philippines has potential. It indeed has many of these. We have stated those many times in our past videos, related to the electric vehicle production, to commodity processing factories, and many more. And maybe, if we do have the right mindset and roadmaps for the Philippines, it could also, in many ways, emerge with profound manufacturing capabilities. If Taiwan and South Korea are two nations far smaller than the Philippines, then certainly it is possible. But anyway, what do you think?